Assalamualaikum dan salam sejahtera. Saya Najib Arif dan ini Fokus Minggu Depan. Kami membawakan perkembangan terkini apakah yang akan membentuk liputan sepanjang minggu hadapan. Sudah pasti sejak beberapa hari yang lepas kita saksikan perkembangan di peringkat antarabangsa. Ketegangan yang berlaku antara Rusia dan juga Ukraine melibatkan juga negara-negara NATO dan juga Amerika Syarikat, di mana pada ketika ini kita menyaksikan perkembangannya Amerika Syarikat menghantar lebih ramai tentera untuk membantu Ukraine, dan pada masa yang sama Rusia juga menempatkan beratus ribu tentera di sempadan negara Rusia dan juga Ukraine yang mungkin pada bila-bila masa akan mencetuskan peperangan, dan juga Amerika Syarikat dalam kenyataan terbaru menjangkakan Rusia akan menyerang Ukraine pada bila-bila masa sahaja, dan sehubungan itu negara tersebut mengarahkan rakyatnya untuk segera meninggalkan Ukraine. Dan juga menurut Amerika Syarikat, serangan mungkin bermula dengan pengeboman udara, dan juga setakat ini Rusia masih menafikan dakwaan itu di sebalik penempatan 100,000 lebih tentera berhampiran sempadan Ukraine. Dan kenyataan Amerika itu membawa kepada negara sekutu iaitu United Kingdom, UK, Australia, Kanada dan juga Belanda turut mengarahkan rakyatnya keluar dari Ukraine secepat mungkin. Ketegangan ini sudah pasti menjejaskan sentimen pasaran dan juga harga minyak mentah dunia. Namun sejauh mana kesannya selagi mana peperangan belum bermula? Kita bersama dengan di talian pada ketika ini, kita bersama dengan Ketua Pakar Ekonomi Juwai IQI, Shan Saeed, yang bersedia pada ketika ini. Shan, thank you so much for joining us all the way from Pakistan. Shan, Malaysia has a sad history when it comes to turmoil in Ukraine. We've seen our national carrier shut down in East Ukraine a few years ago, and this is due to tension between Russia and Ukraine. And today, once again, we've seen the tension escalate. Shan, how do you see the possibility of Russia invading Ukraine and its impact on the oil market? Shan.
Yes, Najib, the situation is very delicate at the moment. As you know, on 7th February, President Macron from France, he visited Russia to deliberate on this important subject of Russia and Ukraine. And after 5 hours of meeting, there was no clear outcome. And on 10th February, the Weimar Triangle, that is Germany, France, and Poland, they said to meet, and if that meeting was successful, they will have a Normandy summit. But at the moment, I feel that the situation is very tricky, and both sides should have an engagement strategy. The challenge is that Europe and US, they have played their cards wrongly with Russia, and they don't know how to engage Putin. As you know, Putin is a smart player. You know, he's a chess player. He's ex-KGB officer. He has a PhD in economics, and he knows how to maneuver. And if you recall, when ex-Chancellor Angela Merkel was there, she had kept a smart maneuvering with Putin. The scenario looks very precarious for Europe. What if something goes wrong, some misadventure from any side, whether Russia or Ukraine? It is going to impact Europe a lot. And I wouldn't be surprised if the supplies are disrupted, and there will be some supply constraint going forward if the small-scale war between Russia and Ukraine, it starts in the near future. As you know, that Ukraine is a pivotal point. 50% of Europe's oil and gas from Russia, it passes through Ukraine. And if something goes wrong, if there is some bottleneck in Ukraine, obviously Europe will have to pay a very high price for oil and gas coming from Russia and globally. So I think, in my opinion, all players should come to the table. They should engage Putin. And Putin is a very smart man. He's willing to talk to Europe. He's willing to talk to anyone from NATO. But the challenge is, who is going to lead from Europe? That is the main challenge. Many years back in 2016, I said Germany is Europe and Angela Merkel is the leader of Europe. She was the only one who was leading from the front when it comes to Europe. But now Angela Merkel is no more in the driving seat. The question that every investor or globally, all the people are asking in the diplomatic corps and the diplomatic circles, that who is going to lead Europe? Macron or Boris Johnson or any other player or any other leader from Europe? But the challenge is, I don't see anyone smart enough to engage Putin at this point of time. So I think if there is a small scale war between Russia and Ukraine, obviously the oil prices are heading north. And at the start of the year, not start in December, we said the geopolitical risk is getting deeper into the market and that's going to impact the oil market a lot. So the risk premium, the geopolitical risk premium, especially in the oil market, is right now trading between $30 and $35 per barrel. Oil is up 18% year to date. And when I say risk premium, the fair market value of oil is around 60, 65, between 60 and $65 per barrel. But right now, oil is trading at $92 per barrel, which is 18% year to date. So I think, in my opinion, oil prices will have a major impact, and they will take the beating and they will take the pressure. And when the markets, especially when this war pressure comes to the market, is going to hurt many people in Europe. And as I said in one of my posts in LinkedIn, that winters in Europe and US would be very tough because of higher oil prices. And if inflation into account, higher oil prices will bolster inflation, and that will put the recovery of global economy in jeopardy. Thank you.
And Shan, what if I can share few scenarios? The probability of events in the oil market at $100 per barrel, $125 per barrel, and also $140 per barrel. How would this range of prices impact the world economy, Shan?
Yes, Najib, these are the scenarios that many people, I'm glad you brought this up, many banks and many investors are looking at. We at Juwai IQI, we have already shared with our investors, and yesterday I was in a local media in Pakistan, that if oil, the probability of oil touching three figures, that is $100 per barrel, the probability is between 70 and 80%. The probability of oil prices touching between $125 and $140, the probability ranges from 40 to 60%. So that is again quite huge, taking into account the geopolitical risk, taking into account the supply destruction, taking into account the major players, they are not budging from their position. So if oil prices are heading north, and we are looking, what if we are looking at the same scenario what happened on 11 July 2008, when oil prices were trading at $147 per barrel? And on 31st December, oil prices were trading at $34 per barrel. So can we expect a wild swing this year? I don't think so, because we at Juwai IQ have already mentioned with our valued investors and with all our newsletter, which is all documented, we foresee oil prices between 77 and $107 per barrel. That is happening fast. So if oil goes above $100 per barrel, we might have to revise our outlook or forecast for the oil market. But at the moment, we stick to our forecast of 77 and $107 per barrel. But the scenarios that you have asked me, these are very pragmatic. And most of the energy players and global investors are now looking at these variables and at these scenarios very, very closely. And they are worried. They are worried because if oil prices are heading north, obviously it's going to bring inflation. And with pandemic, still present in many countries, that's going to pose a huge challenge for the global economic recovery. If global economic recovery is not happening this year, so we have already shared, the global economy will not recover before 2025. Things are very dicey. They are geopolitical risks. They are governments who are under pressure. There are governments who cannot understand the difference between monetary and fiscal policy. This is what is happening in Europe. There are governments who are messed up with monetary policy. There are various governments around the world that, they don't have money in the fiscal side to bolster their balance sheet. So there are many challenges in the global economy, and these challenges will continue because this pandemic has created havoc for the global economy, and it has cost global economy between 40 and 50 trillion dollars globally. So I think these scenarios are very pragmatic. Everybody is talking about these scenarios. I wouldn't be surprised if oil touches $125 per barrel by year end, and if oil touches $100 per barrel by summers of this year, I wouldn't be surprised. So I think thank you for bringing these scenarios up, and we expect these scenarios to happen this year. So many people, as of 2020, 2021, people were saying that oil prices are heading south. They will be touching $30 and $35. But right now, I don't see that scenario happening. And we at Juwai IQ expect oil prices to be heading north, and they're not heading south. Thank you.
Shan, I want to bring this discussion into global economy as we face with uncertainties in regards to geopolitics and economic recovery as well. Inflation is getting out of control in the US especially, and the Fed has lost the game. How many hikes can we expect in 2022? It's either 4 or 5 or 7. And how do you see in Malaysia context? Because in terms of BNM raising interest rates in the coming quarters, given that we recorded 3.1% growth?
Najib, we have been saying since April, May last year, I have been saying on Astro, AWANI, and on various press and media, that this inflation in US is serious and is stubborn. It's not temporary or transitory, as Jerome Powell and Janet Yellen were saying to the market. So they have been wrong. The Fed has been wrong about inflation outlook. And the challenge is, how do you control inflation? The answer is this inflation is getting out of control, and Fed does not really understand how to control this inflation. And many bankers, many professors in US, they have been wrong about it. Everybody was saying this inflation is transitory. Yes, we believe what Fed is saying, but Fed is wrong. And Fed has been wrong not this year, but for the last 15, 20 years. So what the market is expecting, we at Juwai IQ, along with various banks like Goldman Sachs, JP Morgan, Credit Suisse, Bank of America, we have been saying that there will be 4 hikes happening in US, and those 4 hikes would create a lot of shenanigans in the equity and bond market. A lot of investors will suffer. But if you see the latest scenario, the statement coming out of Bank of America and Goldman Sachs, they're expecting interest rate hike in US going up to 7 times, and discount rate will touch around 2% by year end. And we are expecting discount rate between 125 and 150% this year. But the way inflation outlook is there, it looks very serious. And inflation is, not stopping at this point of time. February last year, the inflation was 1.6%. But right now, inflation, 3 days back, the figures came, it is 7.5%. But the challenge is, how do you calculate the inflation accounting? Because when you say 7%, it is not true. Because oil prices are up by 56% last year. Food prices are up by 33% last year. And most of the people, they spend their money in buying grocery items, in buying oil and gas. They don't buy furniture or laptops or cars or real estate or luxury items every day. Everyday purchase of average American consumer is grocery item and oil and gas. And more than 50% of their salaries go into buying grocery item, paying tuition fees, buying oil and gas. So I don't know whether these inflation numbers coming out of US, they are accurate or they are in line with market expectation. But we expect that inflation accounting in US has been flawed because they don't take into account the food and energy prices, and that puts a huge question mark on all these figures. Regarding your question that Bank Nigara would raise interest rates, at this point of time, we IQI, we expect that Bank Nigara will continue to hold rates till second quarter of this year, and Bank Nigara might raise interest rate by 25 basis point, depending on the market condition and the market structure. At this point of time, I think the economy is moving from a recovery to stability mode. All credit goes to Bank Nigara for maintaining excellent monetary policy landscape. They have maintained a very good stance by pursuing a prudent monetary policy. And of course, the government has done an excellent job in getting 98% adult population vaccinated. Excellent job again. And Maida and Meaty, they have kept the momentum for trade and commerce. It has touched 1.3 trillion ringgit. Again, it has given confidence to local investors. That's why we see a lot of foreign investors coming back to Malaysia because of economic confidence, because of macroeconomic stability, and above all, government has total control of the economy, in managing this pandemic. Other countries are suffering like Australia. Australia has been the worst case scenario. Europe has been the worst case scenario. They don't know what to do, how to control this virus. So we expect Bank Negara to take a very measured approach, and they will bolster the price stability outlook, which is part of the mandate, growth stability outlook, and financial stability outlook for this year. So I think overall we expect Bank Negara to raise rates as per the market requirement. At this point of time, I don't see Bank Negara is in a rush to raise interest rates. Once the economy goes into the stability mode, then Bank Negara will evaluate the economy, and they will do pros and cons of raising interest rates by 25 or 50 basis points at the end of the year. Thank you.
Okay, Shan, thank you so much for joining us at this time. Today, Shan Saeed yang merupakan Ketua Pakar Ekonomi Juwai IQI membincangkan tentang situasi di ketegangan di Ukraine dan juga sempadan bersama dengan Rusia dan bagaimana impak pada ekonomi dan juga harga minyak mentah. Kita akan berhenti rehat seketika. Kita akan kembali selepas ini.